Yeah! Yeah! Turn me up! Turn me up! Yeah! All right, good morning, everybody. It's 8 o'clock in the morning in New York City. Guess what? Stock market wants to open soon. We don't have a lot of news going on today, but we got a lot going on tomorrow, and then it's the holidays. So holy smokes, maybe this is the calm before the storm. But nonetheless, welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders just like you. So you're in good company. Let's get on with it. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Chicka, 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 Slim Shady. Good morning. Hey, my name is Wayne. Got black shoes on? That means the rules, you have to have a black belt. If you have a black belt on, you got to have a black watch. So, got the Panerai on today. Haven't done that in a while. So, welcome. What you got going on? Well, we got to do some technical and fundamental analysis. Like I said, I don't think there's a lot on the calendar today, but if I remember tomorrow, there's PCE, there's personal income, there's durable goods. Maybe something else. I mean, holy smokes, there's a lot going on. Okay? Oh, Joe Boss just said, hey, man, we just released the SPR. Yeah, well, we only priced that in 2 weeks ago, right? So anyways, now that it's happened, great. So anyways, let's do some technical analysis, some fundamental analysis. And hey, if you have questions, if you want to, try to improve your trading, that's why I'm here. That's the raison d'etre. I want to teach you how to put together trade plans. Excuse me. I'm not here to put you into trades. I'm not here to think for you. I'm not here to give you alerts. If you want to get rich, look, you got to do it yourself. Okay? Okay? If you're looking for somebody to make you rich, or you're looking for a nice service that'll do work for you or make decisions for you, none of that, right? If you work for somebody, that somebody's not going to make you rich. So look, you're going to have to do it yourself. So at least I'll teach you the process in which perhaps you can improve your trading results by careful planning, both technically and fundamentally. Does that sound reasonable? Okay, cool. By the way, my name is Wayne McDonell. I'm a currency trader just like you. And before this, I was a venture capitalist. Before that, I was a successful or nearly successful internet entrepreneur. What else? I worked at NASA for a couple of years. Well, a couple of summers. I worked with George Soros in a nonprofit organization, which I started at the bottom and worked my way to the board of directors. Cool. That's it. That's me. So how are you? I hope you are fine. Ask questions, get involved, take notes. Would you please click the thumbs up button just to tell YouTube, hey, this is reasonable quality content? That'd be great. And also invite you to visit tradersway.com. Simple reasons. You're going to need a broker. That's how it works. You want a broker that actually enters your trades into the interbanking system, not B-book you and then trade against you. You don't want that. So Traders Way actually enters your trades in the interbanking system. You don't want to overpay for fees, but also you don't want to get slipped. So usually what happens is you go to some cheap broker that says, hey, we got the lowest spreads in the world. Of course, you can't make money on that. So what they do is slip your trades. And so you're actually paying probably twice as much for your currency trading, which is weird because you chose them so you can get cheap, but you actually are probably overpaying, and that's unscrupulous. And so anyways, Trader's Way, if you go with a variable spread or a fixed spread account, normal sort of competitive fees. If you go with an ECN account, normal competitive fees, right? But their execution speed is faster than most, and their swaps are bigger than most. Holy smokes, you're like, that's interesting. Yeah, well, they understand it's a symbiotic relationship. They don't want you to come in, open up a small account, blow it up, and go away. The cost of acquisition for a client is too high. It doesn't make any business sense. So instead, they value your education and they hope for your success, because then you'll trade with them for years and years and years, and that's just a better business. And that's why I'm here, baby. Okay? Okay? Cool. So let's start at the beginning. Wait. Oh, here it is. Have you had your ghee this morning? Have you had your crushed bones, bone marrow, collagen in your coffee? So early this week or late last week, one of the things that was discussed in my private group, yeah, it's private, is the idea of splitting the deck. If the dollar's strong, you buy it. If the yen is weak, you sell it. So far, so good on that. Interesting call. What else going on? CAD actually rebounding. Interesting. Kiwi taking a nosedive. Wah, wah, wah. Wow, Kiwi. Where you going, brew? Okay. Aussie up, down, turn around. So really not a lot going there. This is a crash, so you probably like Kiwi dollar down. Pound's still strong, so probably pound yen up. Euro, sort of the great recovery, but weren't we getting near the bottom, the projected bottom anyways? Okay. Hey, good morning, Gary. How's the weather today? Let me guess. 81. Sunny. Slightly windy. What's tomorrow going to be like? 81. Sunny. A little bit of wind. All right. Sounds good, by the way. That sounds good to me. For you, it's probably horrible. Oh, is it scorching? You're getting out of here. It's what it's all the way up to 83 today. All right, so let's look at dollar strong. Oh, whoa, strong. Look at that. Bum, 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 bum. So let's go with this. How do I say goodbye to Euro USD? The good trades that seem to last outweigh the bad. Huh? The good trades that seem to last outweigh the bad? Really? Running for the shade? No kidding. Interesting. Okay. Let's break this down. Geek busted. Doom, doo, doo, doom, 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 doom. Okay, piggy, piggy, piggy. Can't you see? Let's see where we are. Now, if we only look on the right side here, okay, you can see we've already hit our daily projected low, but we've also hit our monthly projected low. Huh? Monthly low. Okay, daily low, and you're like, man, it doesn't get any better than that. Oh, whoa, 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 whoa. This predicts this. So we've also hit weekly projected low. Oh, my God. So what do you think? You need more? Are you going to keep squeezing blood out of that stone, or is that good enough? Are you done? You want more, huh? You gotta get some more out of that before you feel successful? Right? Really? What would you recommend somebody here? Keep selling? Or would you recommend somebody start buying? Or would you recommend just stop trading? Why don't we do a poll on that one? What would you recommend a client? Keep selling, stop selling, start buying. Run away! Run away! That's Monty Python. Or you can say, run, Forrest, run! Okay, I popped up a poll. Boom, 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 boom. Scalp buy. What do you mean manage trade option? You're not going to say, well, you should take half of it and then let the... Dude, just make a frickin' decision. I really don't like that strategy. Not that I'm saying that's what you're saying, but I know that's a lot of people get that advice. And I'm like, dude, just make a frickin' decision. When I say let your winners run, I don't mean hope. Hope is not a strategy. Well, it might go farther. Might is not a strategy. You're either at support or you're at resistance. Okay? This doesn't say maybe. This chart does not say maybe. So let's end it here. Okay? So I'm not picking on you, vodka, but let me keep going on this idea here. Okay? If you're going to use this algorithm that plots out the high, low, and close, divides it by 3 so you get a weighting average. Thank you for participating in the poll, by the way. Almost everyone says stop selling. So this predicts a bottom. So you either, right, stop selling here or you stop selling here. But selling here is dumb. What's wrong with you? What's your major malfunction? That's dumb. You understand that? If you're going to sell, sell high. You can't sell low. That's just dumb. Okay? So you stop selling. Now, this is a profit zone. It doesn't mean buy. It means stop selling. Now, what if it goes further? That's part of your analysis. Okay? This top doesn't predict that. If this was the top, that would predict that. So anyways, do your analysis, but there's no guesswork. Okay? What I meant is manage, hold positions, and tell by... No. Okay. If you're not going to make decisions based on your algorithms, get rid of the algorithms. Okay? Raymond, that's not far from the conversations that are happening. Okay? So anyways, that's a profit zone. Okay? But if you thought we were going here, you're still in the stop selling camp. Do you understand that? Because you can't sell here, but you can let it run. Okay? And if you're going to keep taking it down further, you have, once again, you got to look into this a little more. Let's go to the hourly and zoom in a little bit. Okay? If you're going to keep selling, you still have to understand that it's Tuesday there's the top, or this is a top, either way, depending on if you count the front run or not. But what does this chart say if you're only doing weekly analysis? Okay? This says counter trend, doesn't it? Doesn't it? How do you read that? Oh, well, it just hit a green zone. Yeah, but it did it in a particular way. Okay? And going into the holiday and big news tomorrow, maybe it's just good to book your profit and go home. Oh, but Wayne, it might. Okay, it might what? And second of all, if it does might, how much will it impact your career? Is it really worth that kind of risk? That's right, Vodka. The projected bottom, the gray area, is the November projected bottom. Okay? This green zone is the projected, right, weekly bottom. But the issue is we're hitting our target on a Tuesday, and that matters, especially when Thursday's closed and Friday's closed. Did you put that on your calendar? Thursday's closed, Friday's closed. So you're waiting for a big move. Okay. Are you reading your chart? Okay. So anyways, I'm forcing you, I want you to think, and I want you to play the probabilities. I don't want you to guess. I don't want you to hope. I don't want you to take half your profits and try to let the others run. Why? If you're at support, make a decision. There's no maybe, there's no might, or there's no what if. You either can read your charts or you can't. Okay? So, anyways. All right, cool. So going out to the 4-hour, this is bearish. It's been bearish for a while. And maybe we start kind of bottoming out here. We don't know, but there's a reasonable likelihood. Okay, I want you to think of this. There's a reasonable likelihood that if it was going to reverse up, so we call that a change of trend. If there's a change in trend, this has pretty good probability that it would happen around this price. Not that it will. It doesn't say it will reverse. But if it were to reverse up, this is a pretty logical price for it to occur. So if you're thinking, well, maybe we have this downward move in November, but we're going to have an upward move in December, this is where we'd start building the base. Vodka says, can we look at gold today? Yes, for you, Vodka. Okay. Okay, so anyways, that's how I look at it. If it falls further, okay, fine. But once again, if it falls further and you're a bear, you would sell up here. Okay, and on a big chart, not a weekly. See, if you were doing a weekly swing, this says out. That's what that says, out. So you can't be a weekly swing trader on this because you got your perfect entry and you got your perfect exit. What more do you want? Okay, so you got to be a bigger time frame than a swing trader. So you got to be, right, looking at it from a higher point of view. In that case, maybe your target's here, but it doesn't change the fact that your setup is here. If you sell here, you don't know what you're doing. And don't fight me. Don't get all mad. Don't pee on my shoes. Don't get upset. Just realize that you're thinking about selling at support, and nobody recommends that. except your last three gurus. Okay? Not this one. Okay, euro dollar. Dog with fleas. Dog with fleas. Huh? There's no bottom to this. Europe is being shut down. This is not a technical trade. Okay? The normal technical trade would be sell in this area kind of thing and take profit here, which we got. And then things started to look bad in Europe. And then Austria shut down. And this is bad, man. This is a tsunami of pain. Okay? There's nothing good going on right now. Oh my God. Okay? Wow. Don't say something like it can't fall further. Do not say that it cannot fall further. Oh my God, this is an S9 or something. You're like, I got to buy it here because it's so cheap. Do not buy anything because it's cheap. If you buy something because it's cheap, you're overpaying. You're paying too much if you buy something cheap. Okay? Only buy value. Because if you buy cheap, you're overpaying. If you buy value, you're getting a deal. You're underpaying and you're getting some intrinsic value. So you're like, Wayne, I don't understand what you're talking about. Okay, let's break this down into something different. Okay? This is cheap. It's garbage. It's worthless and going to be worth less tomorrow. That's a dog with fleas. Okay? Now, if you want to buy some value, you have to wait for a higher high, higher low. Because you're getting some value because technically speaking, and maybe fundamentally speaking, this is likely to appreciate in value. Okay? And you're buying low, but you're not buying a lower low. You're not buying something that is likely to lose value in the future. Right now, Euro USD is likely to lose value in the future. So if you bought it now, you're buying it cheap, but it's got no value. Okay? So you need to wait until you get a higher high, higher low, higher high, higher low. You want to buy in a market that does this. Up, 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 down, down, buy. 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 Up, 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 up. Okay? And you're buying dips in an uptrend. And when you get it, you're getting a good price. You're getting good value for your money. And your new asset that you purchased is almost certainly going to appreciate. Is that what we have with the euro dollar right now? No, get out of the way. Run for high ground. It's a tsunami. What are you doing? Get off the beach. Get off the streets. Get high. And no, not stoned. Okay. So I look at that. I don't want anything to do with it, but you can get up and you can short sell that all day if you want. If you want to skippy scalp it, for sure. Okay? Just make sure you know what you're doing. Okay? Okay? But it's your call, Bubba. If you're looking for something to do. Cool. This was the sell, the sell, the sell. Okay? So on and so forth. Okay? Coolio. Coolio. So that's working nice. And actually, I expected this one to do better than that. But look at it. Okay? Look at that. It's kind of interesting, right? Ma. And down, 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 up, sell. This is a weekly sell. And that target, I'm not joking, predicts 69.17. Look how precise that is. We just hit the weekly low. How do you feel about that? I'll say it again. Okay? This top on Monday says, hey, 69.17 is the best you could possibly hope for. And after that, you should probably take a walk. Wow. No way. Notice once again we're hitting the target early in the week on a short week. Traders know. So your risk now is they got that, and now they take the rest of the week off, and you want them to do 9 more trades, and they're gone. They already got money in the bank. Okay? No, that wasn't a buy limit order. That's a trade from 3 months ago or something. So anyways, thank you, Kiwi Dollar, for all that you've provided. Okay, now, these are my real ups. Come on, Bubba. These are the ones I want to head up. So let's go through the yen pairs, and then we can do commodities like Bitcoin, gold, and oil. Sound good? Oh, no worries, Packery. Boom, 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 boom. Look at the key numbers here. Boom, 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 boom. Boom, 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 boom. Okay, let's get us organized. Okay, let's start with the Aussie versus the Japanese yen. Now, I'm hoping for some Japanese yen weakness. Hope's not a strategy, but I'm looking for it. I'm looking for cracks in the downtrend. Now, this is a hardcore downtrend, and if you were a bear, you probably should have sold it, or you should probably sell it as soon as possible. Okay? I would have guessed that this is where the bears live. Maybe a little higher, but okay. So that's you bears. That's what a bear would do. Okay. You got the 21 down. You got the roll reversal down. Okay, great. Nothing here says buy. Okay. Now, as a bull, however, one of the things I'm waiting for are, sort of the rules of engagement here. And I'm looking for fact-based evidence or decision making. So, again, if there would be a change of trend, where would one expect it to be? Now, remember, a change of trend would be a reversal pattern that eventually puts the 21 above the 55. Okay, cool. So where would that occur if you were to use some sort of scientific methodology? Remember, at this point, it's only a hypothesis. So you would say a double bottom would be great at 82.29. See how specific that is? Not 30, not 25, although I'd believe those, But it's very specific. No, not at S2. No. Okay, no. So that would be a bear out. I'm looking for a bull in, which is different vodka. Okay? So this is what we would look for in the near future if there was going to be a change of trend. There is not. No, you're looking at last week. I'm not looking at last week. I'm looking at this week. 80 to 29 bullish buy zone. Okay? Followed up with daily. So then you go into daily pivots and you would expect up, down, maybe over the holiday, then up. And then eventually high, and then eventually 2155 cross, right? Because you'd get something like this, and this would go, okay? And maybe Monday or Tuesday of next week, you get that. Oh, I see, vodka. Okay, great. So will that happen? I don't know. Okay, I'm just observing at this point. Okay. Now, parts of my sort of hypotheses that might fit this model. Now, you got to realize I'm now kind of backfitting. I'm going to say if that's going to happen, that would be because there's a risk on tone. Therefore, the stock market will be rising. Good. Now I'm really stretching here. Okay, risk on because Aussie yen needs risk on. And why would that, and then risk on would push the stock market up. And something I'm trying to point out, I was going to try to phrase it as a question, but I'm not sure how to ask it, so I'm just going to say it. Oh, how about this? What do we call the rally in stocks? Rally? That's not how you spell it. Rally? I can't think of how to spell it today. Sorry. So I'm going to go back to saying it. The Santa Claus Rally. You guys familiar with this? The period between Thanksgiving, which is this week, and Christmas, which is a month from now, very, 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 very often, let's just say much of the time, maybe even most of the time, the stock market goes up in that period. And if it does, there's a reasonable chance, based on correlation, that the yen pairs will go up too. So I'm baking that in. I don't know if that's true. That might be just baloney, phony baloney. I don't know. Do your own research. So if you think there might be a Santa Claus rally, okay? So for example, if oil and gold are down, gas prices are down, like for the car, okay? And lumber prices down. Coal prices, down. Iron ore, down. Steel, down. People might start to say, that might bring our inflation levels down. And even though a lot of people thought maybe the Fed just has to jack up interest rates fast next year, well, maybe what if they don't have to do that? Okay, that means money will be cheaper for longer. Maybe we don't need quantitative easing, but what if interest rates stay low for many years? Okay. Then there's too many dot plots in the near future. There's too much rhetoric on inflation being sticky and not transitory. We know we got the same Fed in place, so we know the Fed's not going to change their tone. So, well, maybe the media is freaking out a little bit on inflation. Maybe inflation is transitory. We just tapped the SPR, which I've been talking about for 2 weeks now. So now we're actually tapping it. It was just announced. Gasoline prices are going to go down. That's deflationary. Deflationary. Okay? Meanwhile, okay, the bond market is crashing. That's risk on, baby. That's stock market up. You guys see this? S&P 500, 4,700. There was a fund manager that specializes in technical analysis on Bloomberg this morning. And he says this is a secular bull market. Despite everything that's happening today, he's looking out 5 years. Oh, that's what I do. And he's using technical analysis. And he says if you extrapolate the data from looking at business cycles inside of secular cycles, he says we got probably 8 more years left. Oh my God, that's very similar to what I say. And he said in 5 years, when you extrapolate the data, he sees the S&P 500 at 8,000. In 5 years, the stock market's going to double, averaging 11% a year. A normal year is usually about 8. And that's not far from what I've been saying. But I've been saying it for 1.5 years, almost 2 years now. Okay, now going back to this, the 10-year note, rates are higher. Which means the bond market is falling. Jim's like, nice numbers. Hey man, if you have a retirement account growing at 11%, for sure. Be careful of the language, vodka. I don't like the word crash. Okay. At end of a business cycle, maybe. Another way of looking at it is you could say that would be a point of new Fed policy. Okay. Okay. Right? But anyways, this language of this secular cycle and a business cycle, I'm much more focused really on the current business cycle, which I believe reset around April of last year. And I told everybody, and I said you should sell the dollar for at least 5 years. And so you can go all the way back. And how I get there is the smallest business cycle is 5 years, but it can go as much as 13 years, depending on what's going on around the world with our trading partners and what kind of geopolitical risk there is and how high interest rates are and how high inflation is. But you got to remember, the more that you let capitalism work, okay, the better it does. So let me give an example. Not only if we trade together do we get more, both trading partners, right? One country specializes in making a thing. Another country specializes in making a different thing. And because you specialize, you can concentrate all your resources and you can make more with less per unit cost. You're just better at it. You're more efficient. So you get more for less. Okay. This is called microeconomics. Meanwhile, the other country specializes, focuses all its resources, things like, the factors of production being primarily capital and labor, maybe sprinkle some entrepreneurialism. And so one country makes laptop computers, another country makes bicycles, and they could just do both, but they're better off doing one and then trading with each other. And the country that makes bicycles will get more laptops than they would if they made them on their own. And the one that makes laptops will get way more bicycles than they could have if they decided to focus their factors of production at making both laptops and bicycles, you see? And so they trade. So they're better off, you just get more. Now, the other interesting thing is what you're also doing is you're bringing down inflation. Because you can make your own bicycle, but it might cost you $100, right, to make a bicycle. But if you just trade with someone else, with a different country that specializes in bicycles, you get a nicer bicycle and only costs you $75. So what happens is it's deflationary. Okay, do you know how you really get serious inflation? Think about all the countries right now that have serious inflation problems. Not 8% like South Africa, but like 100% inflation. What countries can you think of? Iran, El Salvador, Venezuela, Cuba. Think of these countries. Maybe Haiti. You need medicine for your baby. How much does that cost in Haiti? I don't know. Yeah, they're all nice new ones. Okay, that's when you don't trade. When your borders are closed, like North Korea, and you want to buy a pair of Nike shoes, real Nike shoes. I don't know if that's a good example. Maybe a Rolex watch. Well, there's only 3 Rolex watches in all of North Korea, and guess who owns them? So how much are you going to have to pay to get one, right? Maybe you're right. So anyways, when capitalism works, you get more and inflation falls. Inflation occurs when the government gets involved. They either print too much money, which is baloney anyways, or inflation occurs when there's nothing to buy with your money. So you end up having a lot of money, but nothing to buy. Okay? And what happens is everything local is cheap. So you can get it made for $2 a day, but you want to buy something from Japan and it costs you a bajillion, right? For example, Ecuador, if you want to buy a used diesel truck, big Ford F-150 diesel Super Duty, okay? It'll cost you 500% more than what you could just buy it in the United States for the used one. Okay? So anyways, you want to trade, you want countries to specialize, and if you just leave it alone, you will find equilibrium, and one of the results is you'll have lower inflation. Think about it. For the last 20 years, we've had no inflation in the United States. Okay? Cool. So looking at this is interesting. This tells me the US dollar should be weakening. Okay? Investors, remember, investors in the bond market, the bond market is significantly bigger. Right? Not 100% bigger, more than 100% bigger than the stock market. Okay? So what's happening now? That market is falling. So where's the money going? Well, it depends on who bought the bond. Or in this case, Treasury. So who, right? If the Treasury market's falling, where's the money going? Well, if it was a foreigner, okay? If it's a foreigner, they're probably taking the money out of the United States and bringing it back to their country. They made their profit. They're done. That would weaken the US dollar. Now they could just rotate it out of the treasury market and into the stock market. What would happen to the stock market? The stock market would go up. What would happen to the dollar? Nothing. Okay. You see this light blue? That was interest rates a year ago. Okay? Do you see the middle of the curve? The middle of the curve here is steepening? Yeah. That's not a bad thing. What the Fed would actually like is for the 30-year to go up towards 3. Okay? Think of it like the long-term investment should equal bare minimum current levels of inflation, right? Now, you might say, but inflation's up. Whoa. You want to anchor it, okay? You want to chain your analysis pre-COVID. Because right now, well, in general, you should do that. But right now, we have a denominator problem where COVID lowered the numbers, and now we're getting return of normal numbers. And the return of normal numbers on top of bad numbers from last year make our current numbers look ridiculous. So you can anchor and say, well, how about this year, current data, over, how about I'll just pick a number, 2017. How bad are things really? And, right? And you might find that maybe it's only 3%, not 16%, right? Or 6%. In that case, you could argue that maybe in the next 5 years, the 30-year should be at 3. Okay? Now, really what I think would be interesting is that the 10-year goes to 3. So there's the 10. This goes to 3%. And the 30-year should be at 5%. Because if you're saving money or actually lending money, that like a mortgage, if a bank is getting 5% on a 30% mortgage, if a bank is lending money for 30 years and getting 5%, well, shouldn't you get 5% on your 30-year loan to the government? You see what I mean? So maybe that's where we're going, but that will take many, many years. But I want you to look at yields were low last year. They're higher this year. And they're higher primarily, like if you now did a MACD, okay, you can see that they were, right, diverging, and now they're kind of converging. I mean, they're less up than in the middle of the curve, okay? And that's interesting because these small time frames, you can adjust really quickly. So like in here, if you'd bought a 1 year or 2 year treasury, and then the Fed changed their policy and rates went up, you're not hurt that much because, well, let's say if you bought a 1 year, well, very soon it'll just expire and you roll it over and buy a new one at the new rate. Okay? So you wouldn't lose so much money. But up here, you would lose a lot if the 30 years, so if you loaned the U.S. government last year a loan for 30 years and they paid you 1%, well, shoot, now it pays twice as much. So that bond would lose a lot of value, right? Who would buy a 30-year bond from you paying 1% or 1.5% when you can just go get one now for 2%? You're like, why would I do that? Well, if you lower the price, someone will buy it, okay? So it's much more sensitive, right? The price would change a lot here, not much there. Oops. Where did that all go? So anyways, look at the 2-year. Okay? You see that? The 2-year is doubled. The 5-year more than doubled. Okay? We went from 0.4 to 1.3. Okay? That's 300%, isn't it? The yield on the 5-year went up 300% this year. Okay? And now that the Fed is leaving, guys, okay, much of this has probably happened since the Fed announced the taper. Look at this today. The 10-year Treasury climbs to the highest yield in a month as the 2-year adds to the highest since March of last year. Okay? So I want to make a point here. If foreigners were buying U.S. Treasuries, this number would be falling, not rising. That's the 10-year. If foreigners were buying, this number here, the 5-year, would be falling, not rising. The 2-year would be falling, not rising. If foreigners were buying bonds because it was risk off, this would be at 1.2, 1.1, 1.0. This number is going up, which means foreigners are not buying U.S. bonds. That money is either being repurposed into the stock market, repurposed into real estate, or it's going to leave. And if it leaves the United States of America, the US dollar will weaken because they'll sell their dollars and buy their local currency back. So if it's an Indian, right? A year ago, they sold the rupee and they bought the dollar. Okay? Rupee weakened, US dollar gained strength. Now, if they're bringing the money home, they sell the US dollar and they buy the rupee. Okay? Might be an average Joe on the street. It might be an Indian billionaire. Could be an expat. Could be the Reserve Bank of India. Remember, India was buying gold like crazy. Buying gold up at 1,500. 1,500. They got to the point where they had more gold in their vault than the history of the central bank. Okay. Can it go to crypto? Well, the thing is, if it's being converted to dollars, first, that would increase the value of the dollar. Okay? But if you're going to Binance and buying up a bunch of Dogecoin, will that impact the US dollar? Only if the dollar is bought first. Okay? So you can go to rupee to Doge, I would imagine, but it wouldn't impact the US dollar. But you might drive down the rupee, you might drive up Doge. Okay? But the point is, guys, I want you to look at the yield curve and the shape of the yield curve. A couple of years ago, it seemed like, or last year, it seemed like all the money was going into the 1 year and the 2 year. The reason for that is people couldn't predict the future. So they're like, well, I got to keep my money down here, because if interest rates go up sharply, at least I can dump my 1 year and get into a better trade. Well, now the money's going into what? the 2-year, the 3-year, the 5-year. And they're moving up the curve. Okay? They're moving up the curve because they can see farther out. And this is all good for the stock market, because traditionally, I'm not talking when the Fed and the federal government, so the Fed manipulates the market through monetary policy, the central bank manipulates the market through fiscal spending, but in a traditional normal supply and demand world, what you have is, right, the stock market goes up and the bond market falls. That is normal. Okay? Dogs hate cats. That's how it is. Okay? It's not the cat's fault. He's a likable cat. Purrs and does that little massagey thing that everybody likes. It's a good cat. Dog's not mean, but he chases the cat. That's just how it works. Stocks go up, bonds fall. So right now, bonds are falling. So guess what? I think the stock market will go up. Now, it's not that much of a projection. I'm just saying that would be normal. So if bonds are falling, this yield will go up because I'm talking about bond prices. Okay? Another way of looking at it is you can do it this way. If bond yield, okay, if bond yields go up, the stock market will go up. So hopefully this is a healthy reminder. So let's bring it back. Let's regroup here and then we'll move on. There could be a Santa Claus rally in the stock market. Why? It often, not always, often happens. I think it's hedge fund managers need to hit their year-end goals so they can get their bottles. Did I say bottles? I meant bonus, but I was thinking models and bottles. Okay? Okay? So, if the stock market Santa Claus rally were to occur, one of the things I would look for is, are bond yields going up? And the answer is, heck yes! This was like a week ago, what was it, 1.55? $1.53 2 days ago. The bond market is falling hard, ladies and germs. So if the dollar doesn't weaken, look for other things. What else could you do? Well, the stock market's gone up. My XPeng is almost up 100% in 6 months. Wow, 100%, hundo P. Doubled my money, baby. No leverage. Yeah. Can be a bottle of champagne. Yup. Cool. So anyways, I just want to get your fundies think on. Okay? And right now, one of the things I'm watching closely is Beast. Okay? And right now it's uncorrelated, meaning many of the other yen pairs are still significantly below their 2155 cross. I got my line in the sand going on here, and I'm thinking next week here, but I'm patiently waiting for the rest. I need other things. Remember, this is pound yen, by the way, Great British Pound. Now, I could say I want to buy the Great British Pound because in December, the Bank of England will raise rates. I could do that. That's why this is less down than many of the other yens. But I'm not really doing that. That's not really what I'm building up here. What I really want to do is just consider this whatever, XXX, it could be anything. I want to sell yen. I just want to sell yen. Hope says, am I ordered an electric car? Well, back before anyone really drove a Tesla, for about 8 years, I drove an electric golf cart. You can Google it. I had a gem. Okay, it was like a $30,000 golf cart. And then around the financial crisis, I decided to buy a car because I signed up for golf lessons at the country club, and it was like a mile away. And I'm like, and just the way the golf cart paths were, I'm like, oh man, it's going to take me forever to take the golf cart. So I bought an AMG 55 CLK Cabriolet, which is a lot of car. And it's the opposite of an electric car. So no. Right? Now I have a Porsche Cayenne GTS Magnum made by Tech Art. If you like cars, you're like, what? So it's really a Tech Art GTS Magnum. And once again, not an electric car. But I saw the electric Porsche yesterday, in fact. Gave him the Porsche nod. Hey, what's up? And it looked pretty nice, yeah. The Neo EP9, yeah, I don't know. I don't like cars. I've owned pretty close to 200 cars in my life. Pretty close. Certainly more than 150, but probably pretty close to 200 cars. I don't like. Yeah, I like them, but I don't like them. All right, so yeah, that's what I'm looking for here. Let's do one more. Let's look at this one, and okay. This is actually not, this is the line. This is support inside of the zone. So again, I'm looking at, oops, that was supposed to be an if. I'm doing the if then. If it's going to reverse, then it will likely happen somewhere in there, and I just need to wait. Buy a Rimac Navara, $2 million. 24. Oh, that's interesting. I don't know that one. Yeah. Oh, thank you, Hope. All right. So anyway, so that's what I'm looking for in the coming days, maybe next week. If we get a Santa Claus rally, a lot of these things will change direction. So I like this stepping up, as I already showed, but we got room to go. We have more to go yet. I look at the price that we're rising up to as resistance. So a lot of these trades are like, I'm probably going to go long next week. So let's get through this week. All right, so I got a lot of questions about gold, oil, Bitcoin. Let's do that next. Mm-hmm. over here. Ba, ba, ba. All right, let's put that in its place. All right. Going to do a quick pull. I hope not specifically. No. No, I do not. Please answer the poll, y'all. All y'all. And please take a moment to click the thumbs up button just to tell YouTube this is pretty reasonable, okay content. Thank you for that. Appreciate your participation. So we'll do it in that order. Let's do some goldy gold. Hey, this smells like transitory inflation to me. Remember, buying gold is typically what you do when you're worried about inflation. Okay? In the early days of the month, both buying pivots worked out. We went screaming through the target. Okay? Got to up in here, which, interesting enough, wasn't even a, like, I don't know, a real number. There must be some other real number going on there. You can see how we got resistance marked, right? Bearish engulfing candle, all that. And then is totally collapsed. Totally collapsed on us. But in a logical fashion. This is that old man easing into a hot bath, right? Up, 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 hit it. Down, down. No higher high, higher low. No higher high, higher low. Just a little bit back, right? Now you have lower low, no higher high, lower low, no higher high, lower low, right? No lower. Oh, 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 oh. Okay? That's very similar to what's in my book. Okay? So a total collapse, but this might be inflation fears residing. Okay? Okay? Cool. That's the market talking. Okay? Good. Once again, I say, huh, cool. Okay? The other kind of interesting part is when this went up, the dollar was strong. Okay? Or at least it looked strong relative to everything else. And now we have this coming down. But again, that shows some dollar strength, but I don't think there actually is. I think that's people leaving gold. And again, not necessarily in terms of dollars. Okay, this might be the Reserve Bank of India selling. Okay, this might be the Central Bank of Israel selling gold. Because remember, they bought gold a year ago. Sort of, even in the summer, we talked about it a lot. But now maybe they're unwinding. Could be a rabbit, could be. Okay? So what would the target be? What do we know? Well, the monthly isn't so helpful. So let's start tall and then go small. What does this tell us? Gold hasn't done jack compared to last year. But this is what I was telling you guys. Last year, central banks around April, started buying gold because of the flow of capital towards their economy, which pushed up the value of their local currency, which then makes problems for that central bank because they manage economies that should have a weak currency, not a strong currency. So COVID pushed money home, driving up the home value, right? The value of the home currency. So the central bank of that home currency then said, well, we got to weaken our currency, but we don't want to screw up our balance sheet. So they exchanged money for gold, devaluing the value of the money and pushing up the value of the gold. Maybe some of those central banks slowly unwind because not only maybe they don't need to artificially weaken the currency, but maybe they enjoy making money. Maybe they made a good trade and they're making money on supporting their economy. How would you like to do the right thing and get paid? So that's what's going on here. So I want you to think about gold and oil. Now, I find gold challenging. Okay, and let me explain why. Okay, I'm going to mark it kind of like this. Okay, why? If inflation goes up, people buy gold. Okay, if the economy, if consumption goes up, not just prices, but actually the demand, regardless of price, independent of price, just if everybody in the world is doing better this year than last year, then the consumption of gold will go up. They're not buying gold as an inflation hedge. There's just more money in the world and people are spending the money. So more computers will be sold, which will have some gold in it. More cars will be sold, which will have some gold in it. More people will get dentist work done that they pushed off during COVID. Some of that will use gold in the fillings. Consumption of gold will go up. More people will buy jewelry. Consumption of gold will go up. Some people will continue to say, fiat money is worthless. I want to hold some gold bullion or gold coin. Consumption will go up. So when I had a big argument with a Harvard professor of economics over the dollar and gold and all that kind of stuff. And his closing remark, kind of case closed, if consumption goes up, consumption for everything goes up. Everything. If consumption is going up, consumption for everything from a Big Mac to a big rig will go up, including gold. And I said gold goes up when the dollar's weak. I was doing the inflation side or the devalued currency side. And he said he was going on the consumption side. So sort of like supply and demand argument. So when does gold come down? When there's a better alternative, I suppose. Okay? And it might be when there's no inflation and no consumption. Okay? So gold is complicated is all I'm saying. And right, more and more I think, and you guys have noted this too, that in certain times it's been gold versus crypto. Hey, what's up, RJ? Runster, Runorama. Okay. Cool. Okay. If you look back a couple of years, okay, the low of the year 2018 was the central pivot point. The low of 2019 was the central pivot point. Ha 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 ha. Interesting, huh? These are buys. The low. Wait, I got all of that backwards. Sorry. 2020, 2019. So the low of 2021 is not the central pivot point, but M2. Okay. Neat, right? I don't know, just food for thought. So really, I'm just pointing out, gold has been a mediocre investment this year. It was amazing last year. Okay, but what might be happening is central banks around the world, maybe Malaysia, maybe Israel, maybe India, so on and so forth, are slowly unwinding their gold reserves as part of their new monetary policy. So if their old monetary policy was weaken their currency by exchanging their cash for gold, now they might be saying, hey, we're sitting on profit, billions of dollars of profit from our gold investments. Maybe we unwind some of that and move it back to our currency slowly so we don't over appreciate, that we can book a profit or something. You know, the new policy, which would be different from the old policy. Huh? That's interesting, isn't it? Would you click the thumbs up for that? No? All right. Well, I'm trying. Let's do some my oh my WTI. Sell the rumor, buy the news. The United States just announced they're tapping the Strategic Petroleum Reserve to lower oil prices. And oil prices rallied. Okay? Meanwhile, when we were talking about it, it occurred. So, that happened, but what do we know? Let's go factual here. Just the facts, ma'am. Double top MM3 predicts a bottom of MM1. Target is 73.35, I guess. I don't know, 73.25. Let's just say 73. Okay? 85 to 73. Okay? So if you're going to try to carry that out, that's not my opinion. That's just what the chart says. Okay? Drag this across. Okay? What's going on? Nothing's right. I'm torn. You're thinking probably this. What do you stink? Smell like a plan? Or this makes a higher high, goes all the way back to the central pivot point, and you walk. You take a small loss here, but you have to ask yourself, where is it going? Are we going to 73 or not? Okay? So I need to go through the news to find out how much they're tapping, who's tapping, is Japan tapping, is China tapping, who else is tapping the SPR. Also, this might be a trade, I doubt it, but OPEC, remember, where does the SPR come from? from the IEA. What is the IEA? It's the answer to it's the anti-OPEC. OPEC was created first, then the IEA was created to offset OPEC, and they do that by having their member countries, which are basically all the OECD countries, okay, have strategic petroleum reserves in case OPEC tries to screw around with people and use energy as a weapon. So the IEA, some of the IEA members are tapping the SPR to drop oil prices. So OPEC is going to drop supply and push oil prices back up. Oh, no, you didn't. Yeah. Okay. Okay. So Jim says there's 6 others. So that's a lot of IEA members, right? So now what? So supply could fall. So is that what you're going to play? Are you playing the side of the OPEC or the side of the IEA? What else could happen? Russia attacks Ukraine. Okay, the Ukrainian army cuts the pipeline. Yeah, they'll freeze to death, but so will the Russians, and they'll go broke while they wait. Okay, which kills supply, jacks up nat gas, and Europe goes into a deep recession. Meanwhile, Putin takes a nice apartment in Kiev. I miss Ukrainian food. I haven't had Ukrainian food in a very long time. I'd like to try some fresh borscht, some pierogi with some fried onion maybe, some cabbage rolls. No, it's been a very long time since I've had a good cabbage roll. Wow, could happen. Keep your eyes on the prize. So right now, I think this is just a reaction. And then, right, sell the rumor, buy the news. So that was gold, oil. Do some Bitcoin. And we're just still sitting on my line. Okay. Just sitting on my line. Not going up, not going down. You're not at support. You're not really at resistance. You're kind of at a neutral zone. It doesn't look buyable, but the downward pressure seems to be diminishing. I don't see on this chart any major price, maybe a psychological level somewhere, but I don't see that really except for 55. I wouldn't say this is an extraordinary buy or sell. If you're going to try to use basic price action, you might be selling this, but then this bothers me. So this is, to me, fairly neutral. And then we got 60 back up in here, right? So we know that that's probably a problem. Okay, and there's probably something in here. So, I don't know. Crypto's got to figure some things out. That's all. Okay. Okay. Cool. Would you please click the thumbs up button, the little likey? So again, thanks for good questions. I hope this was a helpful session. Thank you for your professionalism and your positive energy. That just happened.